Hey there, traders and investors. Todd Gordon here with my partner, Ryan Bouchey. Ryan, what's going on, man?
How are you over there? Everything's good here in Boston today, although outside of the drop in the markets to kind of close out the day. But other than that, it's pretty good. We got some nice weather. It's warm. Got outside today, so all good on my side. How are you?
Good, man. Good. Again, video two. I played the short intro. Do you mind if I just take a minute and play the real intro because we love the music so much? Do you mind if I throw it at them?
Bring it on. Let's do it.
I love that. Isn't that great? Hey man, why do you own your own business, Ryan? Why do you do this job? Just give me the first answer that comes to mind, and it's not to put you on the spot.
So you can play your own intro music to a weekly webcast.
No, to have
have a little fun.
Have fun, man. That's it.
That's all part of it.
That's all part of it. Yeah, what a day. Hey, what's going on with you, dude? I haven't talked to you all day. We talk hours on it every day. It's been quiet today. CNBC, a lot of things going on. What's going on with you?
Again, watching markets as they close here just now, just kind of keeping up on it. But we're still in that infancy phase right now. We were laughing earlier how it's another one of those weeks where market close on Thursday and you just scratch your head as to where the week went because it's just flying by. So much to do, but a lot of good stuff. Talking to a lot of clients this week, a lot of incoming clients, and it's been great. It's been really an awesome week. So can't believe it's already heading into Friday tomorrow, and just trying to do what we can to close the week strong.
Exactly. Yep. All right, sounds good. And let me do one more. Just take care of legal. This is going to be ugly, guys, so bear with us. But just get the disclosure out quickly, please. Speed read the required disclosure, which will also be included in the show notes. The show notes below. So yeah, let's dive in here. What a crazy market. We have obviously a lot going on. It seems like the back and forth is constant with what exactly Russia's intentions are. The market seems to be really trading based on geopolitical tensions. One day, this doesn't even seem to be a politically driven report. We're just trying to get the story. Like, I went on CNN just to see what the headline is, and we can do this experiment. I went on CNN to see what the headline was, and U.S. says Russia plans to manufacture justification for war. So CNN is banging the tomahawk here, and then you flip over to Fox, and I think we had basically a similar headline. So it really just seems to be on the West here. We're just trying to figure out what their real intentions are. We don't seem to know. I've been I had a long CNBC hit today. I haven't seen the latest. Ryan, is there anything that you've seen that we should bring to the surface?
I think it's more right now. We talked about this last week on Friday. I mean, same thing. The headlines on Friday started getting really ugly that Russia and Ukraine were on the verge of war, right? And we saw a big drop in the market, similar to today. And we talked, I think, outside of the presentation we gave at Markets Close on Friday, just saying, I know our news organizations and our headlines are making this thing to sound pretty bad. And, some other news coverage we're hearing and following is kind of saying that it's not necessarily manufactured, but it may be built up a little bit in terms of what the true threat is. And I think right now, making any major sort of decisions to a portfolio is really tough because we really don't know kind of what this outcome is going to be. And, it is a case, though, that the markets are trading on, good days. When we came into Monday, we had a great day in the market because, things seem to be de-escalating based on the headlines, right? Today, again, more negative headlines in terms of the aggression. And so that's what's leading us right now. But I don't know if we're really kind of in a position to kind of say where the outcome is going to be. And I wouldn't make any major portfolio changes based on it, especially right now, because again, I'm hearing and reading a lot of conflicting sort of elements in terms of what's truly happening there, what the level of escalation could be, and really what the threat levels are. So, right now I think it's a time where we're going to see, intraday volatility. I mean, we saw it today. The markets started, pretty far down. They almost, I think they were actually up for a little bit early in the afternoon, and then we're seeing a decrease at the close. And not that we're, trading on the news all throughout the day, but just kind of watching it, kind of seeing how the market's reacting to the news. And it's all headline driven right now. And that can be, it's dangerous to make any sort of substantial moves based on sort of the headlines like we're seeing today and in the past couple of weeks, let's call it. I can't hear you. All right, we're gonna wait. I think Todd is updating his audio. But as we said, right now, and we want to talk about this a little bit too in terms of what we're doing within the portfolios. But we have to take into account what we're seeing, what we're hearing. Certainly on a day-to-day basis, but not trade on necessarily a day-to-day basis. Really kind of taking a longer term look on sort of what the underlying both technical fundamental basis, but with headline driven headlines as we're seeing past couple weeks, really have to be aware and be careful to not overreact, if you will. And we are back into the pattern of feels good news is good for the market, bad news is bad for the market. We saw it change a little bit heading into the end of the year, where uh, good news was kind of impacting the market in a negative way, mainly based on what's happening with inflation, uh, interest rates, the Fed, what they're trying to do. And I think when we take a step back right now, uh, you know, really important to kind of stay focused on, again, what's happening. Maybe not so much of a focus on the headlines, but really taking a step back and making sure you're properly allocated for a little bit longer of a time frame, because again, you don't want to make any long-term adjustments or long-term sort of mistakes in a market like we're seeing right now. That it's the first time. It's been going on for obviously a few weeks, maybe even a couple months, but first time we've really seen some volatility in quite some time, since we got out of that COVID drop and back from early to mid 2020. All right, Todd is figuring out exactly what happened to his audio on his end in video, and we apologize. Obviously, don't want this to happen today as we're coming live and talking about everything going on this week in the markets. But we'll get that fixed and situated. But I wanted to talk, and this was something that Todd and I were going to touch upon today, kind of more kind of shifting gears a bit, right? Let's get away from pure markets and portfolio conversation and kind of shift a little bit to a planning topic that I'm talking to clients about right now, and I think it's timely in terms of, right, we're coming off of 2021. You're kind of starting to, tax documents are rolling in. Time to start really thinking about getting taxes done and your taxes filed. And yeah, we always say right now is a great time to start planning for this tax year. And so when it comes to the volatility we've seen in the market and kind of what we're working with clients on, and not every client, but the occasional client is, taking a look at some Roth conversion strategies. And I had a conversation with a younger client, and it wasn't a conversion conversation, but a conversation related to the determination of making traditional 401k contributions or Roth 401k contributions. And right now, that is, it's for a lot of employees, business, whoever it may be, you have that option, and it can be hard to kind of navigate and really understand what is the best approach to that. In unfortunately, in many cases too, it's sort of one of those gray areas, right? Because again, we can control what we can control, and we know what our current tax levels are and tax rate, tax bracket, whatever it may be today, but we don't know what the future is going to hold. And so there's a ton of gray area here, and there's still a lot of gray area when it comes to a Roth conversion. But what I can say is, I like to be able to have control of what we can control today or this year, whatever it may be. And when we do the appropriate planning, especially the appropriate tax planning, we can get a good idea and a good feel for what current tax rates are going to be, and in controlling maybe not getting into a higher tax bracket. And so right now, a Roth conversion, if it's the right strategy, and there's a number of things to take into account. One, your age and time to sort of make up the benefits of making those conversions, right? Because you're going to pay taxes on it now. It's going to have an upfront cost, but it has a really good long-term uh, value to it if time is on your side. But there's also been some changes in the legislation over the last few years that have made kind of that equation even a little bit different, right? When it comes to non-spousal inheritances of IRAs, right? In the past, you used to have, if you were non-spouse, so say your children had inherited an IRA at your passing, they had their lifetime to make withdrawals from that IRA, and it would be on the same factor of your lifetime factor. So it'd be a small percentage that you were required to distribute from that IRA, but you had the lifetime to do it, and so you didn't have to kind of take it all at once. And now with the changes, you are required to take those within 10 years. And so by doing so, you could put, again, your children or whomever else as a non-spouse who may be inheriting an IRA into a tough tax position, right? You really want to plan, when we're looking at investments, your portfolio, your overall wealth. It's really, at the end of the day, it's what you keep versus what you've made or what you've earned, because the tax strategies that you can put into place and work on to be more efficient, or make sure you're saving and keeping as much as you can, because that's when you're looking at the bottom line, that's what you keep, not what you make. And so with some of these strategies now, for older individuals, whether it's someone near in retirement or even in retirement, sometimes these Roth conversion strategies actually make more sense than they did in the past, based on kind of what your long-term goals are with that money. And so when we look at that and we analyze it for clients, and like I said, we're doing a lot of that work right now. We have some really, really good tools that we're using for clients in terms of, one, tax planning, and kind of looking at a pretty detailed analysis at where they are at from a tax perspective, making sure that, again, we're keeping them either within particular tax brackets, or not going too far, maybe not jumping another tax bracket, but keeping them in a range bound, so that we know every dollar that we're converting, we know exactly what that cost is. And one of the biggest factors when we're having these conversations too is, hey, we want to make sure that those taxes, if you're going to do a Roth conversion, you're paying those taxes from money you have on, say, the side.